Booking.com received a 10 million demand from KRA. But before we get into how they won their case and how you can win against KRA as well, I want you to imagine that you are there, you filed your tax return correctly, and you've declared all your income, and you've done this honestly. You've paid what you owe, and after paying even what you owe, you receive a demand from KRA for 10 million shillings. And this is not on any new income, it's on the income that you've already declared to KRA. Now, you need to understand that KRA has power to issue tax assessment based on any information that is available to them. Now, that power is very real and it's very wide. And what this case established is something that every Kenyan businessman needs to understand, because there is a difference between your VAT return and your income return, and any difference between the two does not mean that you owe more income tax. Those are two separate taxes with two separate rules, and confusing one with the other is an error that could cost you millions if you don't know how to fight it out with KRA. Now, take a pen, take a paper, take some popcorn, and work on your best mile, because KRA is just about to lose, and lose big. The company in this case is Booking.com. Now, Booking.com, for those who don't know, is a global brand with a Kenyan office. And like most of you, Booking.com files and paid its taxes properly, correctly, every year. They don't hide like you do. But KRA found a 33 million difference between their income tax and the tax return that the company had filed on VAT. But instead of accepting the company's detailed explanation, KRA went ahead and issued a tax demand. But here's what makes this case genuinely fascinating. KRA, just like our beloved president, changed its mind halfway through. They abandoned the VAT demand and issued instead an income tax demand. Not on different income, on the same 33 million shillings. This is the same variance. And that decision to change the tax midway cost them this case. More on that one later. By the end of this video, you will understand exactly why a VAT variance cannot further down the line become an income tax liability. You will understand what to do when KRA changes the basis of assessment midway through a dispute you could be having with KRA, and how the High Court drew a line that protects every honest taxpayer from KRA. Now, let me give you the story. Booking.com is a Kenyan limited company that operates legally in Nairobi and pays all its tax returns with KRA every single year. For the year 2016, the company declared a total income of 200 million, plus or minus a few shillings. For VAT, the company declared a slightly lower amount, and this was because of timing differences between invoices. This is the kind of difference that is very normal in international businesses and does not indicate that anything has been hidden from KRA. Now, KRA sometimes doesn't make sense. That's why on May 2021, KRA started a routine desk audit on the company's 2016 records. Now, KRA noticed that the income declared for tax purposes was higher than the income that had been declared for VAT. The difference between these two amounts was 33 million. And 33 million is no small money. For the same amount, I can get you a property on Tatu City so that you can start insulting your landlord and move to Tatu City. What KRA did was to write to Booking.com and ask them for an explanation. And they asked nicely, as KRA is. The company responded immediately. In October 2021, they gave KRA a very detailed letter. Not like those chats you write during a breakup. Very nice chats. It explained that the differences between those two came from invoices that were for December 2015, but that invoice was done on January 2016. So some revenue from December 2016 was only invoiced in January 2017. And because Booking.com is an international company, it must convert all its accounts from the American accounting rules to international accounting standards. And when doing this, it created an adjustment of around 20.5 million. More importantly, that 20.5 million had already been fully declared More importantly, that 20.5 million had already been declared in the tax return for 2016. It was only absent from the VAT return. I know you're not understanding anything I have said, but you're not alone. KRA also did not understand it. Now, after sending this explanation, Booking.com had nothing from KRA for a full 8 months. One more month, and kids would have been born. Then, in June 2022, KRA suddenly issued a VAT demand on the 20.5 million adjustment. Also, they wanted a VAT of about 3.2 million. Booking.com sat down and on July 2022, with even more details and even more reconciliations, replied to KRA. But then something very strange happened. In September 2022, KRA completely changed its position. I think they were getting a little bit angry from all the back and forth. They abandoned the VAT demand and instead they issued a corporation tax income demand for the same 20.5 million. And for this 20.5 million, they wanted 30% of it, and 30% of 30 million comes to around 6 million. Now, for good measure, KRA took the 6 million demand, added penalties and interest, and the total became 10 million plus change. Now, Booking.com was very shocked. And they were shocked because this is income that had already been declared for income tax in a different year. KRA was just trying to tax the same money twice, in 1 year and in the subsequent year. That is why on October 14, 2022, the company formally lodged an appeal. Once they did this, something else that was very interesting happened. Currently, the law gives KRA 60 days to respond to an objection in case a taxpayer objects to a tax assessment. For 57 of those days, there was total silence from KRA. Just 3 days before the deadline, KRA invited Booking.com for a meeting. Now, Booking.com, the accountant and the management wore very nice suits and went to KRA, and they were hoping to be given something. They went there in very good faith and explained everything again. But what happened? The very next day, KRA issued its final decision confirming the full 10.6 million demand. Now, Booking.com felt that the meeting with KRA had just been a formality. But, most important, you can never put a good man down. Booking.com went, sat down, and appealed to the Tax Appeals Tribunal in January 2023. And the company's central argument was very clear and very powerful. The company's central argument was very clear. You cannot issue an income tax assessment on income that was already declared in one income tax return. Also, they say that a VAT problem is a VAT problem, and an income tax demand needs to remain as an income tax demand. Those two taxes are separate, they are governed by different rules, and a variance in one of them does not automatically create a liability on the other. And the company wasn't done. They also pointed out that KRA had used the wrong figures entirely. This is because KRA claimed that the company's income tax for 2016 was 125 million when the actual figure from the company's returns was 200 million. What KRA had done is they had invented a problem that simply did not exist. They claimed KRA was just cooking numbers. The tribunal listened to all these guys, and on May 9, 2024, the tribunal delivered its judgment. The 5 members of the tribunal agreed completely with Booking.com. They said, in terms that could not have been any clearer, that any undeclared turnover in a VAT return does not give rise to any additional income assessment when that income had already been declared, accounted for, and an income return covering the same period submitted to KRA. And that is why the tribunal decided that the additional assessment from KRA had no reasonable basis, and the tribunal set it aside entirely. Like me, KRA does not like losing and doesn't take losing kindly. That is why KRA appealed to the High Court. But there is an important rule that applies to all High Court appeals from the Tax Appeal Tribunal. Now, Under Section 56(2) of the Tax Procedures Act, such an appeal can only be on questions of law. You cannot go to the High Court to re-argue the facts. And most of the grounds that KRA was given to appeal were factual questions. The question whether variance existed, whether the company had explained itself properly, these were not questions of law. And that's why on February 28, 2025, Justice Musyoki dismissed KRA's appeal completely. And when Justice Musyoki was doing this, they noted that the tribunal is a body of specialists in matters that the High Court will not interfere with. Most of KRA's 7 grounds of appeal were questions of fact, like whether variance existed or did not exist, whether the company had explained itself properly. When the High Court looked at this, these were not questions of law. That is why on February 28, 2025, Justice Musyoki dismissed KRA's appeal completely. And Musyoki noted that the tribunal has specialists who are knowledgeable in tax matters. So going to High Court, you should only be going to High Court on items of law, not on facts. And on this case, there was no question of law. And just like that, KRA had to lick its wounds, go home empty-handed. And here's the lesson for you. If KRA ever issues you with an assessment that seems to overlap with a different year and a year that you've already filed for returns, do not assume that KRA is right, because they are simply KRA. The first thing that you need to do is establish clearly which year the tax assessment relates to and whether the income in question had already been declared in a different year. Once you do that, gather your returns, look at your reconciliation, and present your explanations to KRA. As you give these explanations to KRA, make sure you are keeping copies of everything that you send to them. That's why if you keep them and KRA changes the basis of an assessment in the middle of the dispute, like what they did in this case, shifting from a VAT demand to an income tax demand, then the shift itself is also worth challenging in the Tax Appeals Tribunal. The law requires consistency, and a moving target is a sign that the original assessment may not have been well-founded. Also, if KRA issues an objection decision that appears to have been prepared before the meeting, at which you are supposed to present a case, document that one as well. In Kenya, the courts are also interested in whether the process of arriving at an assessment was genuinely fair. And if it wasn't fair, you can bring that one up to the High Court. If you're there and you're dealing with a KRA assessment that you believe is based on a misunderstanding, either KRA misunderstood your returns, or if you have received a demand that seems to tax the same amount of income twice, you need to reach out to us, because we usually help businesses understand their tax position, prepare their objections, and navigate the dispute process with KRA. That's why in the next video, I'm going to tell you about one of Kenya's most well-known hardware and home improvement companies. This is a business that has been around since 1946. But this company found itself in a tax dispute over 165 million shillings that was sent to a lawyer to buy land, and this land was for a different company. This is a case that turns on a single question. Where does borrowed money end and your own money begins? And the answer will change how you think about business financing forever.